How's it going, everyone? It's Mikey Millions, and we are about to dive into episode 8 of the Robinhood 3K Challenge. We have a lot going on this episode, so we're just going to take it one thing at a time. Let's get rolling. Here's a quick recap for those just joining for the first time. We began this challenge on September 30th with $3,000. Over the last 7 episodes, we traded 10 times and collected gains of $301.63, or 10.05%. For the first few episodes, our strategy focused on the wheel, a conservative strategy that uses cash-covered puts and covered calls to collect premium. Since episode 4, however, we've switched jackets and started trading spreads, mostly to introduce some new strategies. This brings me to a point I'd like to make right off the bat. Here's my Robinhood account at the beginning of episode 8. This area is where I was trading the wheel, and this area is where I was trading spreads. You can see the difference pretty clearly. But this isn't to say that spreads will make you less money than the wheel. The reason my gains slowed down when I switched to spreads is that I'm only leveraging about 5% of my account at any one time. When I traded the now Iron Condor in the last episode, I was only leveraging $150. I could have made that trade with an account 1/20th the size of what I'm working with. However, I'm too risk averse to leverage my whole account and trade 20 spreads at once. What I've got to do is work with my bread and butter and trade the wheel in addition to demonstrating spreads. So in this episode, I'm switching things up a bit. Here's how it's going down. First, I'm not going to hide this, I tried to kick off by pulling a fast one, and I bought a put on Triple Q in mid-December, which ended up being like the worst possible trading decision ever. I honestly thought the market was going to see the Phase 1 trade deal and think it was bitch ass. Agricultural purchases? I thought the market wanted to see some real tech protection, and as a result, I figured Triple Q, which is tech heavy, would melt down on this trade news. Turns out I should have inversed myself, because Triple Q finished slightly above my 207 strike. By the time I closed, I had lost $36. As a result, I started this episode in the hole. I shouldn't have made that trade. I know better than to buy bearish FDs in a bull market, but I took the L and got back on the Theta Gang wagon. With that confession out of the way, let's talk about how I'm shaking things up for the better. I said prior that I'd like to trade the wheel more often, but that doesn't mean I'm shying away from trading spreads. In episode 6, Engaged Eye nominated Activision Blizzard, ATVI, for my episode 8 trade, and he won with an impressive 387 votes. So congratulations to Engaged Eye, we are going to trade Activision Blizzard. But in addition, I'm going to get back to my bread and butter and leverage the remainder of my account to trade the wheel. This will, hopefully, start bringing those bigger gains again. But let's start this off by checking out the technicals on Activision Blizzard using stockcharts.com. First, we see here that the relative strength index lightly bounced off the overbought level, but it's showing some staying power here in the upper 60s. It's trending down lightly, but it's not exactly weak, so RSI is pretty neutral, maybe very slightly bearish. The candlesticks showed some spinning tops recently, followed by more congestion, so we aren't going to get much here. We can't pick a direction based on these candlesticks, so that's a neutral indicator. The moving averages show that we are in a long-term uptrend, but we need to be looking at the short term for this trade. I think the congestion pattern so high above the 50-day moving average may indicate it's time to take a step backward. However, that's just basically speculation, so I'm going to call that neutral. Volume is definitely tapering off, and normally I would call that bearish, but since this time period includes some abbreviated trading hours and closed markets, I can't necessarily make that call because I think that usually happens around Christmas. ATVI's technicals look pretty neutral so far, but the MACD finally gives us something concrete. The signal line looks poised to cross the MACD line, which is a nice bearish indicator. The histogram confirms that buying pressure is drying up, and I think buyers are exhausted at these prices and are too skittish to buy Activision above 60. This is our most concrete indicator, and it is firmly bearish. I wish we could have seen some more weakness from the RSI so that I could really join Bear Gang on this one, but the MACD is my favorite indicator, and it's flashing red. I think ATVI is going to drop before it reaches new heights. I just can't tell how soon, because the RSI is buoying this stock up. However, I do think we are in for a drop, so I'm going to put a 7 out of 10 on Activision Blizzard being below 59.50 2 weeks from now. That said, I'm also not super bearish, so I think the way to go is to reattempt the Iron Condor. But unlike the super wide trade on Service Now, this Activision Blizzard Condor is going to be really tight. That'll offer us more premium in exchange for more risk. And since ATVI got so many votes, I'm totally fine with going in hard. So let's get this Condor set up. First, we will open ATVI, and we will select Trade Options. I'm going to flip to January 10th expiration so that the premiums are worthwhile and Activision has some time to drop. As far as selecting strikes, like I mentioned, I don't think the stock has much upside from this level, so on the call side, I'm going to go only 20 cents out of the money and sell the $59.50 strike for $85 premium. And then I am going to trade back 63 of those dollars for upside protection by buying the $60 strike. That will give me a $22 credit on the call swing. So far, this is a call credit spread, but to make an Iron Condor, we need to do the same thing on the put side. Now on the put swing, I want a little more breathing room, so I'm going to go 80 cents out of the money and sell the $58.50 put for $59 premium. And then I will trade back $45 for downside protection in case this stock drops more than I expect. This will give me $14 of credit on the put swing, and combined with $22 of credit on the call swing, I'll get a total of $36 credit per condor. My break-evens are $59.86 and $58.14. As long as ATVI stays between those prices, I will profit on this trade. And here's the amazing thing. Since my long and short strikes are only 50 cents apart, my max risk is $50 minus the $36 I collected in premium. My max risk is only $14 per condor. I'm feeling great about that. Since my max risk is less than half of my max gain, I'm feeling confident enough to trade 3 of these Iron Condors. However, to make sure I get a fill, I'm going to place a limit 1 cent down from Robinhood's suggested price and ask for $35 per condor. That will make my total max gain $105 and total max risk $45. This requires $150 of collateral, so while I could trade 60 condors, I'm not an idiot and we're going to save the rest of that collateral for other trades. Everything looks good, so let's go ahead and submit, and now we eagerly await our fill. We already know that's not going to work, so let's get real impatient and move this limit down to 34. Let's try this again, limit 34, the max gain is now 102, max loss 48. And of course now we get filled right away. So let's put this trade aside and check back in later. By the way, if all that sounded like Portuguese, I do apologize. I know I've owed you guys a video on Iron Condors for a while, I just have to get through a couple more Theta Gang strategies first before we get there. If you're lost right now, check out any number of the dozens of Iron Condor instructionals on YouTube and the explanation on Investopedia. They're not as fun as my videos, but they should get you up to speed. Anyway, let's get back to trading. Over the next 2 weeks while the ATVI Condor runs its course, I'm going to sequentially trade some wheel strategies, 2 of which I've already opened. I identified some stocks I'd like to wheel, and I elected to sell a put on Ford at the $9 strike for a measly $2 so I can buy chocolate, and sell a put on Snap at the $15 strike for $13. Both expire at the end of the week. I'd be happy to own either stock at those strike prices. Why just wait for Snap to go down to 15 when someone will pay me to wait for it to go down to 15? Worst case scenario is that these stocks drop below my strike and I buy 100 shares at a price I'm happy to buy at anyway. By expiration on January 3rd, both the contracts on Ford and Snap expired worthless, so I collected the full $15 premium. This left me with another week before the Activision Blizzard Condors expire, and I had over $3,000 of collateral to play with, so I elected to sell the $9 strike on Ford again, this time for $6, and to sell the $10.50 strike on US Steel for $7. These will expire on the same day as the Activision Blizzard Iron Condor, so we'll come back to these 2 in a minute. Sit tight. It's Wednesday, January 8th, and over the past 2 weeks, I've been digging to figure out where I went wrong. ATVI broke above 60.80 earlier today, shattering my Iron Condor's upper wing. However, at the end of the day, some huge selling pressure hit ATVI, and it's melted over $1 off of its high over the past hour. I'm not going to buy back all of my condors because I'm working on strengthening my hands, but I am going to buy back 1 condor and reduce my risk in case this drop gets bought up and my condor doesn't heal. I looked for a fill at 33, but go figure I can't get a fill until I move my limit up to 38 cents and suffer a $4 loss. Still better than how this condor looked earlier today. I was expecting max loss until just now, honestly. Here we are the next day on Thursday, January 9th, and I've been waiting in line at DMV for like 2.5 hours. But ATVI continued dropping into today, hitting a low around $59. This is right in the middle of my max gain area. I'm wishing I didn't buy back that 1 condor, but I've got 2 left, and they're looking pretty good. However, ATVI is coming back up a little bit, and I really don't want the upper wing broken tomorrow. So I'm going to close a second Iron Condor for $22, and this time take a $12 profit. My realized gain so far on these condors is just $8, but I've got 1 condor left, and it's sitting right in the max gain range. If it expires worthless, that will give me a total of $42 in gains on the ATVI Condors. If either wing breaks, my new max risk is just now $8 instead of $16 because of the gains realized on the first two Condors. I plan on seeing this last Condor through to expiration, so let's cross our fingers and wait through tomorrow. The big day is here, Friday the 10th, and the market has just closed. Before I drop the news on the Activision Condor, let's review the wheels on Ford and US Steel. I sold the Ford put for $6 and the US Steel put for $7. Both of these puts expired worthless, so I pocketed the full $13 premium. Combined with $15 from Snap and Ford last week, this brings our total from the wheels to $28. That helps compensate for the loss I suffered buying a put on Triple Q 2 weeks ago, so I'm happy with the result. The wheel strategy is revalidated, and I'll look to continue wheeling in future episodes. And now the big moment, the last Iron Condor standing on Activision Blizzard. After all my bravado about risk management, closing two Condors early to reduce risk, look where Activision ended the week, $58.95. That's smack dab in the middle of my Iron Condor. As a result, both wings of the Condor expired worthless, and I get to keep the entire premium on this spread. I wish I hadn't closed the other two Condors. This could have been a $102 gain. Instead, my one Condor expired worthless, granting a $34 gain, and the other two that I closed early balance out to an $8 gain. Combined, I banked $42 on the three Condors. It could have been more, but I'm glad I had stronger hands this week and kept at least one Condor open through expiration. I was growing worried just 2 days ago when it looked like I'd be suffering max loss, but on Thursday and Friday, ATVI shed about $2, dropping the value of my Condors to $0. Compared to the $48 loss I expected to suffer, I'll take a $42 gain any day. Adding the gains from the wheel options, I gathered a combined $70. If I hadn't suffered that $36 loss going long the Triple Q put, this would have been one heck of a week. Unfortunately, we have to subtract that $36 loss, leaving us with an overall gain of $46 from the trades. Of course, our stocks also appreciated substantially, especially AMD, which has just been on a rampage over the past few months. Bank of America also rose and paid us a dividend, and finally, my man Dean signed up using my referral code, giving me a $3.45 stock that I just sold for cash. That's not actually a legitimate gain, but I'm just going to lump it into my profit because I don't know what else to do with it. All that combined put us at gains of $81.27 for this episode, or 2.4%. That's a solid recovery given that we started with a $36 loss. On the 3K challenge overall, we are now up $381.81, or 12.7%. That's pretty good, and I'm feeling confident that I finally got us out of this rut that I've been suffering for a few episodes. Putting the wheel back on the menu really boosted those gains, and we're going to keep that going. We've got some real momentum, so let's keep this gravy train running into episode 9. For that trade, Eric Shusted nominated GameStop, which the crowd seems a little concerned about, but it won with 126 votes. Robert Papageorge had an early lead with a Tesla nomination, but GameStop made a big comeback and won the day by a large margin. In episode 9, we're going in on GameStop, the racketeering operation where they offer you $3 of trade-in value on a game they sold for $60 last Christmas. In addition, Matthew from Missouri sent me a $25 gift card to Olive Garden for walking him through rolling his options trades. The standing agreement I have is that I will trade literally any stock you want if you send me a gift card. Matthew asked for Immune Therapeutics, which is AIMT, and they're a biotechnology company from California that creates treatments for allergies. True to my word, I'll also be trading AIMT next week. With a big FDA decision on January 17th, this could be quite the trade. You don't want to miss it. By the way, the gift card agreement is still on. Send a gift card to kamikazecash3k@gmail.com and I'll trade literally any stock you want. I'll also give you live updates so you don't have to wait for the episode to come out. Anyway, you guys know the drill. Nominate the stock you want to see me trade in episode 10, and I'll put a strategy together to trade the most popular. Upvote the stocks you like, and I'll trade whichever ticker gets the most upvotes. Challenge me. It's a lot more fun that way. Well, that's it for episode 8. I hope you guys enjoyed seeing the wheel strategy come back into play on top of some Iron Condors. I'm still working on strengthening my hands when it comes to holding spreads, but Activision worked out a lot better than the ServiceNow trade in episode 7. Next week, we're back to putting in work and keeping this cash train riding the rails. Make sure to subscribe so you don't miss the action. Thanks for watching, everyone. I'll catch you next time.